we priced in a 246 market in the fall of 2025 for 2026. 246. That's $22 a hundred higher than what the market averaged in 2025. We averaged $2.24 in 2025. So my caution to producers out there is, remember, the futures market's forward-looking. And the market is supposed to anticipate when we're at our tightest supplies. Our tightest supplies are clearly in 2026, not 25. But the market's job is to have anticipated that. And I believe there's a good chance that we've already baked most of that into the pie.
That's a head-on. We live it. The LiveAg Podcast. Quality cattle deserve premium prices. Consign to a LiveAg video auction and capitalize on today's strong market demand. Our upcoming auctions are on your screen and available online at live-ag.com. Contact your local rep to get started. Now, here are your hosts, deCordova and Casey Mabry.
Well, welcome back to the We Live It podcast here. It's got Casey Mabry and myself, deCordova, along with CattleFax's Randy Blach. And did I say the last name right?
You did.
I butchered last name sometimes.
That's pretty good.
No, we're here at the CattleFax office in Denver, Colorado, and just thank you for allowing us to come by and visit with you and pick your brain on stuff. And we're just glad to be back in action. Me and Casey have been kind of hanging out over the holidays. We're pre-recording this so people don't think we're weird when we start talking about some of this stuff. So, Casey, let's catch up real quick on the kids. I seen you did some showing over the holidays. How'd y'all get along?
Yeah, there was a few.
Jack once?
Yeah, there was a Texas National show, pretty good for us. It's a show a guy named Tim Ford puts on. He started that during COVID.
That's what the pinata was.
Nah, that was a different one. That was a different one. But it was a great one. That guy gives out quite a bit of scholarship money. So we were able to pull in quite a bit of scholarships for the girls, about $10,000
Cool.
On that one. So yeah, that show's grown quite a bit. There's been a heck of a lot of attendance there. But we wrapped that up. We're coming up here next week with a couple pigs with Avery for the National Western. So we're excited to see the new facilities that are in there. We've come up here for about the last 4 or 5 years, and that's probably one of our favorite places to come.
Yeah, we head up here next week with a steer with Tyler, the youngest. And then we got, I guess you got Fort Worth stuff getting ready, and
yeah, it's just all about
visuals. I mean, they're about to bombard us. These kids are about to wear us out.
Yeah, this is the toughest time of year for our family for sure.
Yes, it is. Randy, let's visit a little bit about yourself and where you come from, where you grew up. Did you grow up in the industry? How did it come about to where you're at today? Just kind of give us a little background. We kind of like to get a little personal here. It's all about relationships and getting to know people, and then we can talk about all the analytics later. So
Great. Well, first of all, welcome. It's good to have you all here, and it's good to have you in the headquarters of the National Cattlemen's Beef Association and CattleFax here in Denver, Colorado. You know, my story is a little bit unique. I grew up in Colorado. My family homesteaded here in 1887 in the northeast Colorado in a little town called Yuma. And we continue to be heavily involved in the cattle producing business, farming, ranching out there. And when I graduated from Colorado State University in 1980, I wanted to take a different skill set back to the operation. I grew up in a family. There were 9 of us kids that came in 10 years. And again, there wasn't any of us that had any marketing background. So I said, I'm going to go to CattleFax and learn these skills around the market. And then my thought was at that time I'd head back to the ranch and the feeding operation. Well, January is 45 years now. Well, I've been at CattleFax. It says January of 1981 when I started full time here. So I've been blessed to be able to work in an industry I love, be able to serve customers all across the lands here. And again, I've been one of the few lucky ones in that I feel like I've really never worked because my work is my passion. So I love serving the industry. I love being able to help educate people on how these markets work. And, it's pretty dynamic. This business has changed a lot in that 45 years.
Yeah. What is one of the biggest, I guess if there is a big one that sticks out, what is one of the biggest things in those 45 years that the change that you've seen?
Well, I would say the biggest thing that I've seen is just the way we merchandise cattle, the way we market cattle. You know, whether we're talking about these video auctions and how many cattle we can merchandise in a day, or even the way that when I first went to work at CattleFax, we sold cattle, our customers sold cattle 6 days a week, all day long. You'd sell them Monday through Saturday. Cattle were selling. The daily price change or weekly price change in those days was 25 cents. A big move, it's 50 cents a hundred.
Mm-hmm.
And now we basically trade all the cattle within a few hours, you know, in the various regions on a weekly basis to set the base price. And obviously the bulk of the cattle are sold on some sort of a grid or formula arrangement. So the cash trade has certainly changed significantly in that 45-year time period.
Well, you say y'all are, just to kind of go back to a little bit, you say y'all are pretty involved out here at the National Western. Kind of, they've got a new complex, they got new facilities out there. Kind of walk us through some of that, how that's going.
You know, it's been a labor for so many volunteers and key people in the state of Colorado and in the region that had a vision that we needed to rebuild these facilities. And my family started showing livestock at the National Western. We'd bring carloads of bulls up in here in the 40s and 50s and 60s. We'd bring in carloads every year, so we've been heavily involved all that time. And when I first came to work at CattleFax, I got involved with the National Western, and I've served on a number of the committees through the years that helped put the stock show on. But these facilities, I mean, they had a great plan. But they're going to blow you away. It is absolutely the most beautiful facility I've ever seen. I've been to all of them. It is staggering. The new legacy building is really something that the whole industry is going to grasp because it's going to be there. It'll be open 52 weeks a year. It's just a tremendous venue. These livestock show facilities, there's nearly 8 football fields undercover, and you know, the lighting in there is great. Those will be facilities that'll be used year-round as well. The new show rings, staggering, phenomenal. You're going to love it. You're going to love it. I mean, it is just going to be an eye-opener what you see when you get out there over the course of the next few weeks.
Yeah, for the last couple of years, we've parked on the other side of it and walked by there. My kids, you know, for the last 2 years have walked by that building, you know, really, really excited to go in there and see what the show is. So, like on the hogs, they have to do a raffle, or a draw or a lottery. And so we're lucky to be able to come back again this year. And the girls are like super pumped up to come in there, but it looks beautiful. I've watched a lot of the videos. You guys do a tremendous job. The National Western does of, you know, educating everybody on what's going to happen when you get in there and all that. And so we've been watching those on the social media for the last couple of weeks, but
Can you tell he's got a passion for it?
oh man.
I mean, it's just all over him.
Well, I think
We found his
so hey, like Randy, so what how did that all come about? I mean, I know that those facilities, one question I've got, and I wanted to ask, this is one of those roads is like Pack and Plant Road. So what originally was in that area?
So that's what it was. It was packing plants back in the day, you know, where the new stock show facilities are. That whole road there was what we called the exchange building. So the exchange, that's where all the cattle would come in on the train cars, and they'd unload, and that's where the terminal market. Denver, we had a terminal market there. The buyers and sellers would meet, and then those cattle would be moved right to the harvest facilities right along packing plant road. There's some great pictures that show all those packing plants and all those yards. You'll see some of those throughout the new facilities. It really is a great history, and I think it's pretty awesome that we've been able to keep the National Western Stock Show where it all started.
Absolutely.
You know, because in those days, you had Sioux City, you had Sioux Falls, you had Kansas City, you had Omaha, you had Denver, and I know I left some out. You know,
left Fort Worth out, which I personally think is one of the more important.
But I'm thinking about those.
Absolutely.
The river markets, most of those.
Cattle.
Yeah, for the fed cattle trading, and that's where it was all staged right along the river, going back. And a a lot of people forget that's where the industry was. Yet still we were still selling a lot of cattle on the terminal markets in the 70s and 80s.
Yeah, we're really not that far out. I mean, like when I was starting with Cargill buying fed cattle, there was a handful of those guys that had worked in Omaha, that pushed cattle in Omaha, that were, retiring at that time. So those guys would have been in the mid-60s. So that's, probably somewhere around 45, 50 years ago, which, I mean, you really think about this industry and how it's evolved. It's insane to think about how slow as it feels. And we always talk about how much it hasn't evolved, but then you step back and look at it from a bigger view, and it's evolved a lot.
Well, and you think about that from things that are so important today from the animal husbandry and animal care standpoint, not putting that kind of stress on these cattle where we don't have extra movement, efficiencies, those kind of things. That industry's done a really good job of adapting some of the new technology to where we think about the cattle and what's right by those cattle. I think that's been an area we've grown a lot in as participants in this industry.
Yeah, I mean, as we discussed that, I mean, you think about, we measure shrink on cattle and drift on cattle from feed yard to packing plant. And, those cattle are on a truck in our world now, call it, not much more than 3 or 4 hours. And then they're unloaded, harvested pretty quickly and kind of run through the supply chain. It'd have taken days to get cattle to the market then. So now one thing I was in the, watching the pig show there a couple of years ago, and I'm standing in there and watching it. And I'm like, man, I feel like I'm in the sales cooler at a packing plant or something, with some of the columns and things like that. So, and then I left there, and, without understanding the history of that area, and see the packing plant road and all of that stuff. And I started really thinking about, because I was now not able to see it with my eyes, but then when you step back and think through all that, that's exactly what that place was. So it's neat. I'm going to spend some time this year going through the history side of it with the girls.
So if you get a chance, you go down to the Wagner Arena, which is right below the Sue Ann Schute's new building that will house the livestock. The Wagner Arena is on the north end, and on the upstairs around the perimeter up there, they have a lot of the history of those pictures that I think you'd all find interesting to go take it in and see what it looked like 100 years ago.
Another thing I think we might have found, if we've been fortunate enough to make the sale, I think we might have found some potential buyers. So.
Oh, you got to be from Colorado to make any money up here.
No,
not true. We do it. I've been involved on the junior side for years, and I tell you that junior.
No, it's a great.
To do a good job of supporting these.
Jim is still selling
over the country. John is still doing it, and best there is.
I mean, that's an understatement.
He is something.
Great man.
Having made the sale here a couple of years ago, and that's probably one of the more exciting auctions that we've been in, and and having the ability to go on the green carpet with those hogs and all that stuff. It was, it's pretty neat. So that's a great experience. Hopefully we get to do that again this year. If we do, I'm gonna hit you up for sure.
Oh, you bet.
Well,
if you guys can win, we'll see you at the Brown Palace. We always take the grand champion and reserve grand champion steer to the lobby of the Brown Palace the day of the sale. So that is quite a treat. If you're watching out there and you haven't taken that in, to see those two big steers come walking in the lobby of the most majestic hotel in the city of Denver. That hotel is where Denver was built. That's how all the business was done. And so that's a pretty good tradition that we've kept all those years.
Yeah, and you guys, I mean, they televise that all over Denver, right? I mean, on the news station, watching the auction and things like that. But
well, you want to get into some numbers and kind of what the future looks like in the cattle industry, or?
Yeah, I think Randy's got all the answers.
That's kind of why I came, because I was told he had a crystal ball, so I stood here.
Yeah, so Randy, sitting today where we're at here in January of 2026, I know we've gone through where the market's been. We talk about market cycles and things like that, and there's a heck of a lot of volatility that we would have seen last year, where the market would have probably gone $20 or $30 higher than a lot of people would have expected. And then we saw the market dive going into this fall and then rally back here pretty aggressively. So not asking you for a market prediction at all. Just where are we at? I mean, we've recently seen Tyson close a plant, take one plant down to one shift. Let's talk about, the really, let's kind of just hone in on available cattle supply in the cycle, talk about some slaughter capacity, things like that, see where your head's at.
Well, I think the best place to start with that case is just to take everybody back and let's talk about the cattle cycle. You know, in 2020, when we were at the low in cattle numbers and we'd all gone through COVID and the markets flushed into, I believe it was the first week in July, the market went to 95 cents in 2020. And it was very clear to us that we would see the market push higher into 2025 and 26. So where I would start here with this conversation is the cattle market is pretty cyclical. We're 10 to 11 year cycle. Normally the up part of the cycle is 4 to 5 years in length. 5 is about what it averages, and the down part of the cycle is 5 to 6 years in length. So 2025 or 2026 would have been the ideal timing for the cycle high. So that'd be where I would start. If you were to look at where we've gone, again, if you look at the last 5 or 6 cattle cycles going back into the 1970s, normally when the way I like to look at a cycle is when did the beef cow number was it at the low? And the beef cow number was at its low on January of 2025. That was the low in the beef cow number. The beef cow herd will be 100, maybe 200,000 head bigger this year than it was last year. So it's turning higher because we've dropped cow kill so much. It's not that we're keeping a lot more heifers than that yet, but the cow kill dropped substantially below where we needed it to stabilize the herd. We are starting to see some heifer retention on top of it. That showed up in the last 2 quarters of 25. It looks like we're getting a little more traction on it here in early 2026. So again, as we've stated, this is not the last cycle. It's not going to be as aggressive as it was in 2014-15. It'll be much, much slower. Interest rates are a big part of that. That's a big difference where we have just the cost of money in these operations. And again, you've got all the normal things that you'd have, an aging producer, et cetera. But the bottom line is we will respond to the economic signal, and we are responding to it, just not quite as quickly as we did in the last.
So you're saying that the build back will be slower because of the interest rates and what it costs to build back.
That's right.
That's what you're
That's right. So, you know, if you're going out here and you're buying a $4,000 bred heifer, most people are still paying 8 or 8.5% interest. So, I mean, that's a pretty big number on an annual basis if you're borrowing all that money. Now, we're in a situation now that there was enough money made in 2025 at the cow-calf level that, you know, some of this becomes a tax decision. We're going to keep a few more of these heifers because, again, it just makes sense from a long-term business standpoint. And we saw that at the feed yard level with the profitability. We saw a lot of prepaid feed this year. So, again, all of those things, the market dictates some of those decisions as people are looking at the overall consequences of cash flow and tax consequences during the course of a year.
Where does the Mexican border fit into all this cycle?
Well, that's a great question. I think if you look at 2025 and you look at the 2 biggest market drivers and uncertainties, the things that I think Casey used the term that, hey, the market went $20 to $25 above a lot of expectations. I think that's a very real statement that you made. I think that's very fair because the Mexican border, we would typically bring in about 1.2 million head of feeder cattle and calves out of Mexico on an annual basis. We were down that much this last year. I mean, they would have brought in, this last year would have been a year that we would have brought in 1.4 to 1.5 million because of where we were in the cycle and the price signal we were sending. So we only bring in 250,000, which we left 100 or 1.2 million that we didn't cross. That by itself, if you work that production all the way through the system, is a significant number as far as production is concerned, how many fed cattle, the beef production, and ultimately how much impact it has on the fed cattle market. The other major driver is when we put the tariffs at 76.5% on Brazil. That really slowed significantly the amount of beef we imported from Brazil. And if you think about the futures markets, when those things happened in July of 2025, the live cattle futures markets were trading between 205 and 210. That was the average of the first 6 live cattle contracts out there, what we call the live cattle strip. By the time the market made its peak on October 16th, we'd gone on top of $2.40 for the strip. So the strip basically priced in the absolute tightest supplies in this cycle. That's what we believe we've already priced in. We priced in a 246 market in the fall of 2025 for 2026. 246. That's $22 100 higher than what the market averaged in 2025. We averaged $2.24 in 2025. So my caution to producers out there is, remember, the futures market's forward-looking. And the market is supposed to anticipate when we're at our tightest supplies. Our tightest supplies are clearly in 2026, not 25. But the market's job is to have anticipated that. And I believe there's a good chance that we've already baked most of that into the pie.
Ben, it's a lot to think of.
Yeah, I mean, a lot of the stuff that we got to really just digest and think through is, to your point, we don't have the Mexican cattle in here anymore, or those are diminishing quickly. We're obviously not importing any of them and haven't for quite some time. You talk about 1.2 million head of cattle, which roughly comes out to about, what, 22,000, 24,000 fed cattle slaughter per week.
Yep.
So if we would have had the Mexican cattle into the supply chain, last year we would have averaged a what placed against supply average fed steer and heifer slaughter per month.
Rolly, to your point, we would have harvested another 20,000 cattle, or 20 to 24,000 cattle a week all the way through, because those cattle are coming. The pipeline was full, and then we emptied the pipeline out. So
then that took. So if we had a placed against supply of, we should have had somewhere around a 475 to 480.
Yep.
Steer and heifer slaughter, not total slaughter. Steer and heifer slaughter that was slated to slaughter. We pulled that number out. That was roughly a 5-day work week, 40-hour work week at the packing sector. Last year would have been probably a 500,000, 495 to 500,000. So that's what the packer wants to kill. That's what he budgets everything for. That's what he's trying to kill, as a 40-hour work week, and what we would call it at capacity. We pull those cattle out of the supply chain, take that down somewhere around 5%. So now the packer's chasing cattle, trying to run 40 hours, and then ultimately gets into a really, really poor margin scenario. We get into a really poor margin scenario. We don't have those cattle there. We take roughly how much capacity out of the market starting this week?
25,000 cattle a week is how many hooks we took out this week. We've gone from 500,000 to 475,000. So, you narrowed the gap, but you still have more hooks than you have cattle.
Absolutely. The deficit is probably a little bit less than what it was before. So it doesn't necessarily seem like the packer has to try as hard, right? And then given that, what do we do as far as whenever we start to, we're going to probably look for more capacity at some point in the future, begging for more capacity at some point in the future, whether that's if the Mexican cattle come back into the supply chain, or we start to see the fruits of the retention.
Absolutely. I think you hit the nail on the head. We'll be in a situation that we still have more hooks and cattle through the first half this year. We're only going to harvest 450 to 455,000 head of fed cattle over the next 4 months. I mean, that's a small slaughter, and we've got capacity to harvest 475. So the packers are going to continue to be in the red. We're likely going to see more 32-hour-a-week kills. 32s and 36s, we're probably going to see more of that all the way through here. But again, it's that stage of the cycle. We have to remember, we always have a drawdown. We had the same thing in 2015, where we had more hooks than cattle. And of course, we closed a lot of plants as we went through that 2013, 14, 15 time period. We've lost some capacity now. We may still lose more capacity. So that'll be something we have to just keep an eye on. But again, if the Mexican border does reopen at some point in 2026, we're going to see numbers increase probably more rapidly from a fed cattle harvest standpoint in 2027 than what most people are forecasting today.
That makes total sense. And so, yeah, and that's something that's different than any other cattle cycle that we've probably had. So it almost creates a little bit of a super cycle, I guess you'd say. It probably extends it to some point.
It is interesting. You know, I've had this question a lot as I've traveled around the country this last year, and we've seen a lot of different outside factors that have impacted markets. You go back to 1986, we had the dairy termination program. In 1996, that was the first time corn got on top of $5 a bushel. And the cost to put on a pound of gain when it moved above the price of fed cattle. So we overnight created a carryover on the front end of the market, and the market just, when we were losing money every day, we kept those cattle in our inventory. So you see those kind of factors. One that I think a lot of people forget is May 10th of 2003. What happened on May 10th of 2003? Canadian border closed. Why'd the Canadian border close? First case of BSE. It was really very interesting when you look at the comparison. We did the same thing then. We basically didn't harvest 1 million head of cattle that would have normally come out of Canada from May of 2003 into early 2004. We created the same type of a market run-up in the fall of 2003. In fact, this year our market topped on October 16th of 2026, or 2025, and it topped it on October 15th of 2003. Really? So it's really interesting. You know, you see these kind of things, but those are the only 2 times in my career that I've seen that kind of thing that has happened, where you actually close the border. One was the Canadian, now the Mexican, and the impact was pretty similar.
Yeah, no, it's pretty amazing. I had a guy when I first started in this business tell me that if you want to know the future of the business, look in the history, you know, and it's interesting. I mean, I think about whenever I was, 15 years old, and you graduated college the year I was born. So when I was 15 years old or 14, 15 years old, I took a show steer that was a cool show steer to the sale barn in 1995, 1996, about that time. And there were guys were joking around about they would pull up to the sale barn to sell one, and then somebody put another calf on their trailer because get them gone. You know? So we had the complete opposite scenario, because then you had the cost of gain, cost of production exceeding market price. And then now we've got such an incentive to carry cattle. And so it's the opposite.
It's the opposite.
And so I keep trying to remind most of the people I work with is not trying to be Chicken Little, but hey, grain's cheap, cattle are high, the incentive to carry, everybody's going to carry. We're going to take cattle and, add as many days possibly as a packer will let us to do it until it's done, until it's over. And so we hope that it extends and lasts forever. But we got to remind ourselves that that not what's impacting us today, but what is in the future. And that's what I think, Randy, you guys do a great job of putting a lot of information out there that's data driven. That's really a good resource and a great resource at CattleFax.
To appreciate that. We strive hard to do that on a daily basis, to be factual, to the best that we know the facts, and to share that with our customers or where they can make good decisions. So these markets can get pretty emotional, and I think the less emotion we can carry into these markets, the more facts, the better off we'll all be.
Yeah, I think the emotion comes with volatility, and it's always changing. You said the market, moved a nickel or a quarter or something, 20 years ago. I had a guy call me whenever I was getting off the airplane, and he said, man, how's the market down or up $2 yesterday and down $2 today? And I said, well, because $2 is a quarter. That's what it used to be. That's what we move now. Cash market will move $5 in a week on fed cattle. We've rallied the feeder cattle, $50, $60 in the last 6-8 weeks.
We're going to think about that when me and you are by ourselves, and me and you have a long conversation.
But there's just a tremendous amount of volatility now, and I think that creates emotion around that. So one thing I do want to talk about, Todd, before we leave is, and I think that a lot of analysts maybe don't necessarily look at this, and we don't really talk about it from an on-feed report. But the dairy industry has become a substantial participant in the fed cattle. I mean, both the fed cattle, but in the beef market. The dairy industry, so I think about when I left Cargill, and I was, that would have been in like 2017, but in 2013, 14, 15, we had a lot of Holstein steers on feed in the Plains states. About sometime in there, we basically said, most of the packers said, we don't want any more Holstein cattle anymore. We pushed those things back out. We disincentivized people to place those cattle into feed yards. And now those animals that have come from those reproductive tracts now stand in feed yards, but they're black-hided. And what used to be a Holstein steer now is a black cross Holstein steer, or black cross steer and heifer.
Yep.
And so how does that kind of play in? What are you seeing there? Let's talk about a little bit of the numbers and how that plays into it from a just a total standpoint.
Well, it's been a game changer. You know, you think about our industry, where these supplies of fed cattle would be. We didn't have as many of these dairy-influenced animals in our systems today. And again, you go back to 2014-15, we were using a lot of Holsteins in our systems then. But I believe we got between 14 and 15% of our fed slaughter in 2015 was Holsteins. And you look at where we are today, in our analysis, we believe that 18% of our fed supply in 2025 was dairy-influenced cattle. Okay, beef dairy crosses primarily. There's still some Holsteins in that mix, but beef dairy crosses would be the bulk of it. We think in 2026 that number will be 19% of our fed slaughter will be as a result of the dairy-influenced supply. So it's a real deal. It's here to stay. The cattle have gotten so much better, so much better. I mean, you watch these cattle. I don't care if you're a veteran cattle feeder and you drive through the feed yards today, these really good ones, it's hard to pick them out. They are really good, and they got a ton of meat in them, and the cattle grade like a house fire. So
You got to try to sort it.
They're good. Well, you don't need to sort them, do you?
Well,
I don't know.
So if you think through that, so like, 2014, a dairyman would have viewed that animal as a byproduct. Those cattle were worth, through the peak of it, they got to where they were worth $400 or $500 a head, but then they went back down to where they were worth about $100 a head. And then now that dairy cross animal as a day old is worth some range between $1,300 and $1,500 a head as a baby calf, as a day old calf. One of the large incentives is because the grain prices are so cheap, and we can, basically get the animal, and it doesn't cost very much to get it to the end. We've made such leaps and bounds. When I left Cargill, we didn't know of a whole lot of cattle that were on feed that were Angus sired or limb sired or whatever bull that was. And so I remember telling one large genetics company, put 100,000 on feed and we'll figure out what they look like. And now we've got considerably more than that. The largest bull buyers in the Angus breed, I think, are some of the guys that are putting those as dairy influence. So that calf that's coming out of a Holstein cow or a Jersey or some dairy cow today has got a better genetic. He's getting bred to the absolute best bull.
Yep.
We're seeing lots of leaps and bounds on that, and so consequently, we've seen the grade and the prime and all that stuff jump up higher as well. So, to your point, that's changed a lot, and that's a driver. I think as an industry, we got to look at those collectively. I think some people try to go beef versus dairy, and they want to fight a little bit. I spoke at a group one time, and I said this is the largest. Collection of rubber boots and cowboy boots at one setting that we've ever had. But that's the truth, right? We got to think about it from that standpoint.
but that one guy didn't think he was on his side. He was really
But so let's touch on that a little bit. So we got 9.5 million dairy cows, right? What percentage of those dairy cows do you think are producing an animal that goes into the beef supply chain today?
Well, I would tell you when you look at it today, it's well over 4 million of those cattle come through our system on an annual basis, because what we've been able to do, we've been able to use our rifle instead of a shotgun on being able to develop the replacement heifers that the dairy industry needs, and then be able to focus the rest of the animals that come into, to your point, if you got a $1,300 to $1,500 day old calf, to be able to breed those cows and in a fashion that we've got those beef dairy crosses that can move into our other production system. I've had a lot of dairy producers that have said we're now in the beef industry and milk is secondary. And again, it is that economic system may change some if corn gets higher or whatever the case may be. But today, that's really, I think, the mindset.
Oh, I think it's
mindset.
I think it's the biggest shift in the industry, in since probably if you think back to moving the packing plants out of the cities into, this is a big monumental shift probably that we've seen in a long time. But, and those animals used to be a male into the Midwestern feedlots. I never really bought any Holstein heifers. And so now they're breeding just generic semen, or not generic semen, but beef semen, and getting both a bull calf and a heifer calf, and then sending those to feedlots. So how's it shifted the data whenever you guys look at the on-feed numbers?
Well, you have to really take that into account is when you look at it historically, you'd look at the percent heifers placed on feed. That was one of the metrics that you use that understand where we're really going through expansion phase in the cycle or not. Now that we have so many more beef dairy crosses that are in the system, they're heifers. Again, and the number of beef dairy cattle in the feed yards, that number can get as high as 47 or 48% heifers, depending on how many they need going back into the replacement streams in the dairy side. So we have to adjust that historical number about 2 to 2.5% to put it on a comparative basis when we look back over the last several cattle cycles. So the data has changed. Again, the turnover rate is so much slower on these animals, and the heifer numbers, all of those things are different. So I think one of the big changes from a data standpoint is an on-feed number. A lot of people historically looked at that and tried to derive their marketings out of that. How fed cattle market, well, that didn't work very good. That didn't work very good because of how slow the turnover rate is on those beef dairy crosses.
Yeah, and then the other part of it is the incentive to overfeed cattle. We've slowed the whole supply chain down, and so the average days on feed, we used to look at that as a metric. Anything over 150 days if we got that number too big, it was bearish because we'd worry about a front-end supply. But those cattle, on average, they're all going to be over 150 days, obviously. But
let me age you a little bit there, Chief. In the 1980s and 1990s, our average days on feed on a 7.5 to 8 weight steer was about 130 days. That's how much we were feeding them. And you think about what that is today, it's between 180 and 190 days.
Oh, yeah.
It's just changed so much, to take an 8 weight steer, we're feeding them that many days. But again, a lot of that, though, think about one of the other big changes in our business. In the 1980s and 90s, we were producing as a flip of a coin whether it was even going to be choice. We weren't even quality grading a lot of the carcasses in that time period because there was no incentive. No incentive to make them better. Everybody was whatever they were. We weren't focused on what grade or quality as an industry. That's why we're enjoying the profitability we are today, and I think everybody needs to understand that. If we hadn't got focused on quality, I think would still be that buoy out there in the ocean going back and forth and really wouldn't be enjoying the fruits of what we're seeing today with the level of profitability. 85% of the cattle are choice and prime. Grid premiums have been strong. They've pulled people to focus on these kind of cattle, and we've done it. We've gotten rewarded by doing it. It's moved the needle. Beef demand's at a 40-year high.
That's 40-year high. We don't talk enough about is how high the beef demand is.
That's...
Oh, you put that chart in your presentation every year that I see it, and it is, and I can think about the time period where we lived through that. And if you think through, if the industry was, 50-50 choice select, and then you went to a steakhouse or you went anywhere and wherever you got it, you got a steak, that means that, a select beef is probably, a 50% satisfaction rate.
Yep,
right?
That's right.
And then now they go get a steak, 87% of it's choice or prime, and they're going to enjoy their experience a heck of a lot more.
Unbelievable. The big deal. You think about that and what that means. We got calf prices at these kind of levels. Our analysis would say $1,000 of the value gain in the value of a calf is attributed to the demand growth that we've seen since 1998. $1,000 a head. And the simple way for you to think about this is this way. The CPI, or the inflation rate, has gone up at 2.5% since that time. That's the annual inflation rate. Retail beef prices have gone up 4.6% in that same time period. 2.1% real demand growth on an annual basis, and that's what it's worth. That's why we're enjoying the profitability we are across this industry. I think it's important we all recognize that.
Absolutely.
And everybody leaves supply and demand alone up there in the politics.
We need to let the markets work.
Exactly.
Let these markets work. They're pretty doggone efficient. Sometimes we don't like what they tell us, but they're pretty darn efficient.
Absolutely. No, I totally agree 100%. So, no, it's interesting to look at that data, and you guys doing a phenomenal job of putting that out there so we can see it and then remind us all and beat us over the head and go remind us, hey, again, like I said, the history in this business will tell you kind of where the future lies and, what we need to do as far as just kind of looking around and making sure that we're keeping our heads square.
Yeah.
So,
well, guys, man, I appreciate you sitting here visiting with us, Randy. I
Fun.
can't thank you enough. Anything else we want to cover, or anything you want to talk about before we get off here that we didn't cover?
Keep up the good work out there. Keep up the good work. Industry benefits, technology growth, all these things have been good for all of us. We just got to pedal pretty fast these days to keep up.
Oh, absolutely. Yeah, you can't sit still for sure.
Yeah.
Well, Randy, we thank you.
My pleasure.
Thank everybody out there in social media land for joining us here on the We Live It podcast. On behalf of myself and Casey, we just thank everybody for tuning in. If you have any ideas for industry updates or anything like that, we love feedback. Any questions, be sure to submit them to Casey. He is very good at answering questions. He really likes to talk about his size and stuff, so you should just send those in. But thank y'all very much for making this what it is. If it wasn't for you guys out there, we wouldn't be here, and we wouldn't be able to do this informational stuff with great people like Randy and himself with CattleFax. So thanks for joining us. Hit subscribe and like, and remember, God bless.